So I think the biggest innovation we will see is what Andreessen Horowitz, which is the world's largest VC, they call it's all about me. So all about me, of course, goes into the hyper personalization area. So there's not two human beings living on this planet which are the same. So as you know, at Dakadu, we are working very deeply on what I call my digital health twin. And this is not some, VR crazy, model. It's just that we give you lifestyle navigation that is relevant to your life, that is recent to your life. As I mentioned before, doing more with less. Let's say a person has high blood pressure, and that person gets 4 times per year, has to go to the doctor to get, the recipe to receive a certain drug against this high blood pressure. It's just an example. I think all of the system will take out a lot of this, let's call it overlap, and you understand what I mean by that, that you could theoretically send your digital twin, meaning your blood pressure, your body weight, your blood values, and all this, of course, being encrypted and private and no advertising and no selling of any data. What I'm getting at is there's a lot of overlap in the system. There's a lot of inefficiencies in the life and health insurance system. And that, I think, we will see key issues. If we look on the cost side, which is, a big topic for the insurance companies, I think we will get a lot better in mental well-being because we start understanding a lot of these new models. So as I said before, actually, I do believe that voice will become very powerful. A lot of people who have mental issues might not be able to get the right human service because the system is overbooked. I have personally tried different systems, to experiment with these systems, and I'm actually quite impressed with where we are getting. So I think when we look broader, the patient engagement, the consumer engagement with the voice, that's one box I'm very excited about. The second box I'm very excited about is data efficiency. We saw the EU publishing their digital health paper in December, also the European Cardiovascular Society. And as you know, now there's a law across all of the EU that you can move your medical files across all jurisdictions, across member countries. If you combine this with digital health, with data with no borders, it would obviously create a lot more powerful and efficient system. If we go downstream, the whole underwriting space will become so much more powerful. So I can take biological data, lifestyle data, and all the data that I want to take into my underwriting, and then I can integrate that into large language models and do so-called accelerated underwriting and dynamic pricing. So everybody are scared about cost increase, but if it's all about me and we help people understand their health, that they can navigate their health for their specific life, then you create this relevance that I've been talking about for the last 15 years. And that will, of course, create healthier people, because now it's about my health. It's not about I'm a part of a group of 1 million people. And that will make me more aware of the choices that I'm making on my health, on my lifestyle, on my insurance policies, on my risk. And that's obviously, solidarity principle is one side of it, and that should be here. But the hyper-personalization in a world where biosensors get so cheap, you can't take away.
I'm going to be slightly biased here, Harry, and talk about Ernix. Ernix's Price It for Annuities has launched in the UK. We're launching across North America in Q1. We're launching in other territories across Europe, just based on client interactions. And the reason I think it's going to be the most disruptive is because the annuities industry itself, it's probably the oldest industry. We had pension arrangements and we're taking care of families or just widows and things like that, even during, I don't know, before World War I, or even before that when there were traders and ports routes. So it's a very old industry. How it was priced is still not the most efficient. You still have a lot of approximations. Nexus price it is how to change that. And we've had remarkable success. So to give you more context, Nexus price it was initially for the PNC industry, and we changed our industry. We sort of dominate in most geographies. Uh, our clients came to us saying, "We will do this wonderful thing for PNC. Can you do it for long-term business?" And we took some time. We did a lot of work with our developers, our R&D team, some product managers like myself to build this product. So now we've made it compatible or compliant with long-term business. So it not only provides you with all the standard price set features that you would expect. It's customized for annuities to allow long-term cash flow calculations, to allow interest rate changes, especially given the dynamic interest rate environment. There's full governance. It's compatible with your existing policy administration systems as well as your modeling system. So you could import models from R and Python or Excel. The other thing that we've noticed is a fragmented approach. You'd have teams pricing in R, Python, or maybe Excel, then using mainframe systems to go live to the back end, then the front end API is broken or is used through a distant system. Onyx is changing that. It has an entire unified platform. So right from your data analysis on existing policyholders to new policyholders to just trying to understand where what business is coming from, till sending the quotes live on your front end website. All of it can be done on the Onyx platform. And this changes pricing cycles also. It reduces them by at least 50%. Even quicker. So things that could take up to months can now take weeks and sometimes even days. So yeah, I think that's going to be the biggest sort of disruptor in the insurance industry for 2026.
Yeah, this is tough. I think with AI, there's a lot of AI governance and challenges with data privacy and how to manage models and risks and how everything works with AI, since all those models are, in many cases, are almost like black boxes. So InsurTechs will need to spend a lot more time on the AI governance, but they also would have to be more transparent. Auditability would have to be easier and better, and there would have to be a human in the loop. So humans will have to be in all those processes, maybe less humans, and humans will do different things. My biggest thing, I think, with AI and related to that is there will be more and more human relationships, but all the back end would be automated. So I think in regulated decisions and anything related to that, need to be a lot of trace, transparency, audit capabilities, but everything else would be automated.
Again, it's hyper personalization and customer experience. The fundamental difference between one insurance company and another insurance company is, besides their secret sauce of how they underwrite that risk itself, which is different for different insurance companies, it's a level playing field in terms of the expectations from a customer experience perspective. So the companies that win or will expect to retain a bigger base of their customers will be defined by their ability to service their customers better than their peers. So we believe that in a world where buying insurance from one carrier to another carrier is more or less the same from a cost perspective, right? That the winners will be the ones that will deliver the best customer experiences. And so I think that's where we believe that the industry is heading towards. Consumer personalization, what we call hyper personalization, as the world becomes even more different with all of the advanced AI capabilities. I think the experience of working with an insurance company should be no different than ordering, food on your favorite food delivery application, or how you manage your money with your banks. those experiences are almost always self-service, delightful, friction-free, and we believe that that opportunity gap we see, rather the gap that we see in the customer experience is the opportunity that we see is massive for Usher.